Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Mark Yusko. Futures Radio Show is sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. Remember, new shows are posted on Mondays and Thursdays. You could subscribe to our show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. Now, if you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn about some of the great offers that these sponsors have for our listeners, please visit futuresradioshow.com/sponsors. Now, today I spoke with CEO and CIO of Morgan Street Capital Management, Mark Yusko. Mark and I kicked off today's show chatting about a conference he just attended called the Upfront Summit. We then went to the markets, and I asked Mark what his strategy is for investing in 2020, what he's doing different from 2019. He explains how even though he was bearish the stock market in 2019, he ended up having a great year. Mark gives us his thoughts on what January told us about the markets, and last but not least, we discuss what Mark thinks the Fed will be doing going forward, and I can't have a conversation with Mark without hearing his thoughts on Bitcoin. So without further ado, let me take you right to the interview with Mark. You're fresh off of a conference you were attending. What was it, the Upfront Summit?
Yeah, the Upfront Summit out in LA. They do this every year. It's really one of these kind of can't miss events. Upfront Ventures is a venture capital fund out in Santa Monica, California. And they've really done an amazing job kind of putting the LA venture scene on the map. And they get about, 1,200 people to come from all over the country to LA to kind of celebrate the venture industry there, but also really talk about this intersection of technology, media, celebrity, and social media, and all things that are happening. It's just, great speakers, great content, and you just feel the energy of, again, innovation and, this intersection of all these things that we're all focused on.
Why do you go to this event specifically?
Again, great question. So, time is our most valuable asset always, and I like to maximize the impact from the events that I go to. And so why would you go to any event? So one would be, do they have great quality people? And this conference attracts the best of the best. I mean, you've got speakers from, CEOs of major corporations. We had, the CEO of Land O'Lakes is a great example, one of the top 250 companies in the country, huge in ag tech, which is a really interesting and important area that we're focused on. To, you got celebrity founders of companies. Last year was Gwyneth Paltrow with Goop, and this year was Reese Witherspoon with Hello Sunshine. And it's just amazing to hear these, actors turned CEOs and just the passion they have for being entrepreneurs and really the skill at which they've adroitly accomplished, really great success in the business world after being fantastic in the media world. And then you got, there was a great conversation. We had two, again, actors, Zoe Saldana and Eva Longoria, up there talking about how the Latino population and the market is just huge and one of the fastest growing in the country, and we really have to pay attention. And just one quick stat: one out of every two babies born in California is Latino today. And I just thought it was an amazing. And Eva Longoria had this great stat. And she said, my family's lived in the same town for about 300 years, and we've lived under 5 flags. And she said, we didn't cross the border crossed us. I was like, oh, that is such a great line. And just gives you a sense of one of the big issues facing us today in terms of race and population growth and immigration and all these big topics. So one is the quality of the people. 2 is the quality of ideas. And, Upfront Ventures has just done a great job bringing together some of the most important ideas, from cybersecurity to, Russian relations to, founders in health and wellness. And then probably the last thing is I'm always looking for opportunities to invest capital. And, as I tweeted out yesterday, I met with this woman who is starting what I think will be one of the most important digital media companies over the next 20 or 30 years, after having built one of the largest production studios and stepped down from that recently. So incredible. And then you hear Meg Whitman talking about Quibi and how that's going to launch and may revolutionize the way we consume media. So just awesome event.
Yeah, Zoe, Gwyneth, Eva, I'm starting to understand more and more why you go to this event.
Yeah, exactly.
I want to see Zoe too.
But I'll tell you what, the cool thing is, yes, these actors and actresses are popular and they're beautiful people, but they also have beautiful minds. And one of the things that blew me away is a couple of years ago, I was at this event and Chameleonaire spoke. And he's a rapper, and what could he possibly know about business? And he got up and blew me away. One of the top 10 speeches I've heard at an event, and I've seen a lot of events. And the guy he was one of the first investors in Uber, big seed investor in a lot of areas, and just an incredible businessman. And then, yesterday we had Ice Cube up talking about his 3-on-3 basketball league that's, survived 3 years when most professional leagues fail after 1. And this thing is growing. And he had a great line that I also tweeted this out too.
Yeah, I saw it.
People don't tell you you're crazy, then you don't have a good idea. And I'm like, that is so awesome. So awesome.
I completely understand why you go to this event. And for me, I'm very picky with my travel and events as well, because like you said, time, it's so important. And traveling is, let's face it, it's a pain, so you want to go to these events and you want to get the most out of them. And I love hearing those different perspectives as opposed to always just going in, talking to traders and other people in the financial industry. It's like going out and talking to people, in the world that have had success and hearing just what they think about a lot of these topics that you were talking about. Actually, in my experience, that my 2 favorite speakers that I was actually able to hear were Magic Johnson and Mark Wahlberg. I was always fans of those guys, but once I heard them speak, they really opened my mind to a lot more in life, in business, and even in markets. And that's where I want to kind of take us next is let's talk markets. Obviously, this is Futures Radio Show. And what I want to do with you right now is I want to talk about what your mindset was at the end of the year and some of the things that you were looking to invest in, or things that you were investing in and trading coming into 2020. And as you and I are recording today, we just got the closing bell from the first month of January. So I kind of want to see if anything has changed at all with you. So take us back to what you were thinking at the end of the year and what you were looking to invest in and trade in heading into 2020.
This business is so humbling, right? You can work so hard and think you have an edge and think you've got the inside scoop and then things turn out exactly the opposite of the way you thought. And 2019 was one of those years, and I've taken a lot of grief on Twitter and in the media for, I was very bearish about equity markets, U.S. equity markets, starting in October of 2018, and looked pretty prescient in fourth quarter of 18, I said the market could fall as much as 40% to get to fair value. And it was down 18% through December 24th, 18, and then they summoned up the plunge protection team, and I just really didn't believe they had the gas in the tank. I actually labeled it the cupboard is bare market. I just didn't think that there was any more gas left in the QE tank. I didn't think there was anybody left to buy. Buybacks were starting to dry up. And obviously, I was just dead wrong, right? I mean, just absolutely dead wrong. And U.S. equity market up 31.5%. And I was talking to somebody who was trying to, pretty much poke fun and make an example of me. And they said, you must have had a terrible year. And I said, well, see, that's the problem is you assume because I was negative on one asset, which was the index of the S&P 500, that I suddenly sold everything and went short that one thing. And I said, well, what I actually did a year ago is I did get out of U.S. stocks by and large, but I built a portfolio and it had 6 things in it. And so all during 2019, I pretty much owned 6 things. I owned our hedged equity strategy, which is long short. I owned our emerging markets long only strategy because I thought emerging markets were cheaper than the U.S. I owned Bitcoin, and we'll talk probably some about that later. And then I owned a proxy for Bitcoin mining, AMD. And then I owned long bonds as a deflation hedge through an ETF called TLT. And then I owned some cash, right? So I was a little bit of hedge. And so when you put those 6 things together, so cash was basically flat. My long bond portfolio or ETF was up about 18%, which is not bad. Bonds up 18%, it's pretty good. AMD was up about 140% because it was just a rocket ship. And I did sell too early, right? I sold in the mid 30s and it's at 47 today. So I sold too early. Had a bad day 2 days ago, but I'm happy to. I'm always, the Brad Baruch had a great line about that. He said, I made all my money from selling too soon. I love that line. Our Bitcoin obviously was up 92%, GBTC. And then our emerging markets fund was up 38%, which is pretty good. And our long short fund was up, low double digits. So, not very good relative to stocks, but pretty good relative to hedge funds. So my whole portfolio was up about, a little less than 50%, which is better than 31. And so I was taking a lot of grief about being bearish. This what I still consider to be a very overvalued asset, the S&P 500. Yet again, people get so myopically focused on one thing you said or one thing. And, it's so funny because in this business, what I found is the people who are so afraid of being wrong don't make any money because they never engage and they stay too conservatively invested and they don't take risk. And those of us like myself, I'm wrong all the time. In fact, I strive to be right, 51, 52% of the time. The legends in the business are right 58% of the time. Average person's right about 35, 40%. So I'm striving to be right 51. But I don't care if I'm wrong. It's like Soros said, one of my favorite lines, it's not whether you're right or wrong. It's how much money you make when you're right and how much you lose when you're wrong.
Absolutely.
So anyway, to answer your question, coming into this year, I was kind of licking my wounds a little bit because, your ego gets bruised to people saying you're an idiot online. But, good thing in Twitter is you can block those people. But the key is that I was kind of an idiot. I mean, I missed that don't fight the Fed. I missed the plunge protection team and Mnuchin calling up the banks and say, hey, you got to buy stocks. Okay, I missed that. But I actually didn't miss the opportunity to make money because I had other things that I loved and other things that I was doing all right. So I kind of got over licking my wounds and got over the ego bruise and came into this year really focused on, look, I think this is a time to play defense, not offense. It's Super Bowl weekend, and we know one thing. The team that plays better defense on Sunday will win the game. Defense wins championships. It always has. And I think that's going to be really important. And look, I didn't know the coronavirus was going to happen. I had no idea. And I actually don't think it's going to, I'm touching wood right now. I actually don't think it's going to be as bad as people are trying to make it out to be. You go back to swine flu 10 years ago. Swine flu killed 18,000 people, and no one talks about it. Coronavirus has, there's been a number of deaths, a couple hundred deaths, but we're in no way close to what swine flu did or what even SARS did. And yet the reaction this time has been so extreme that I think that's going to have a huge ripple effect in terms of growth and trade. And I think there'll be a lot of negative surprises in those areas going forward.
So did you, at the end of last year, change some of your investments coming into this year? You said you were getting more defensive.
Yeah.
What did you change?
Yeah. So look, it's really good question. And the nice thing about investing, a lot of nice things about it. One, you get to do it forever. So, and actually the older you get, the better you get at it because you got more experience and you've made more mistakes. And experience is what you get when you make bad decisions. So that's good. You survive it. So I came into the year saying, okay, look, the U.S. market got more overvalued. Almost 100% of the gain in 2019 was from multiple expansion. So earnings actually went down 4 quarters in a row. And yet people are paying more for each dollar of earnings because they think the Fed's going to lower interest rates. And the problem is that logic breaks down when you get near the zero bound. When you get close to zero interest rates, the logic of paying more for a dollar of earnings today doesn't make sense because that low interest rate is a sign of economic weakness in the future. High interest rates are a sign of economic strength. Low interest rates are a sign of economic weakness. So I did take some profits. So we had a really great year in our emerging markets funds. We took some profits and put a little bit in cash, and that's helped us here in January. I actually added to the hedged strategy because it had a crappy, technical term, relative year to equity. So I added a little bit there. I actually am pressing the bet on Bitcoin. I think Bitcoin is going to be a fantastic asset this year because of the halving, or halving, however you pronounce it. And one of the things I learned this, my mentor for many, many years was Julian Robertson, famous hedge fund manager. And I got to know him when I was the CIO at UNC, and he's been great to me over my career. It helped us actually start Morgan Creek 15 years ago. And I've had the pleasure, actually privilege, to talk to all these guys that used to work for him over the years that started, some of the name brand funds like Viking and Maverick and Lone Pine and Blue Ridge and, all these great firms. And I asked them all, what made Julian so great? He was one of the best investors of all time. What made him so great? And amazingly, they all said the same thing. They said he has an uncanny ability to double up, where most people do the opposite, right? Most of us, we water our weeds and we pull our flowers. So as soon as we're right, we're taking profits. And when we're wrong, we're like, oh, I'm right, the market's wrong. I'm going to double down. Julian would never do that. He would cut his losses quickly, and he would say, live to fight another day. But when he was right about something, he would double up. And so that's the way I feel about Bitcoin here. And I think, now, I'm not going crazy, not putting 20 or 30% of my portfolio in it, but we're definitely adding to that position. And then I also got a little more defensive, generally speaking, about emerging markets. And again, it wasn't that I thought coronavirus was going to happen, but I did feel like there was going to be pressure on the Fed to lower interest rates. That always hurts emerging market currencies and some of the real deficit and high current account countries would have a problem. I actually did think that China equities were going to have a great year this year, and I still think they will, but it's not looking too good right now. But I do think there's a lot of things going on in China, and the inclusion into the MSCI indices is one of them. So that one may not turn out so well. We'll see how that plays out.
Hey everybody, a quick pause here to talk about FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index Futures Contract, symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. Being more defensive coming into this year, what would prove that thinking wrong?
Yeah. So, look, I think if earnings in the U.S. actually turned positive, that would certainly, make me want to change my thinking a little bit. As I said, I just don't think multiples can expand much from here. I think it's absolutely insane that Apple, that had negative year-over-year revenue growth, actually went up a ton here in January. It just makes no sense. Their profits in the last 2 quarters are the same as they were 4 years ago, and yet they bought back so much stock. And for whatever reason, people don't seem to make the adjustment that when you buy back stock, you got to change the earnings per share. So the earnings haven't gone up, but the earnings per share went up. That's not real growth. That's just financial engineering. So it's fooling people. Same thing. Tesla. Tesla basically lied. I don't know how to politely put it, and said they made a profit. They did not make a profit. They just didn't. They lost $862 million. And to say you made an annual profit is just a lie. And people don't look at it and say, well, in the first quarter, in Q4, they actually had 7% less revenue than a year ago. And they lost money, and they lost almost $1 billion for the year, yet the stock goes to the moon. So I just think there's a lot of irrationality. And look, Lord Keynes said it. John Kenneth Galbraith said it best, that the market can behave irrationally longer than the rational investor can remain solvent. So that's a long-winded way of saying, look, if earnings actually turn around and we actually see some earnings growth and some revenue growth, I'd have to reconsider. If global growth, which actually we had 2 negative surprises in Europe today, 2 economies actually contracted, which weren't expected. And, there was a little scam yesterday in that U.S. reported a 2.1% growth in the fourth quarter, but it's entirely made up because they used an artificially created GDP deflator that they've never used before, that is far lower than actual inflation. And if you actually used the real GDP deflator that they've always used, it would have had 0.2% growth, not 2.1% growth. So, I think there's a lot going on that's not kosher. And if trade turned around, if profits turned around, if growth turned around, then I'd have to reconsider the defensive stance. But I just don't see how that's going to happen, particularly now with the virus scare.
So as I said a little bit ago, you and I are recording just as the closing bell for the month of January was rung. We're through January. What sticks out to you about the markets this month?
Oh, look, I think it was a tale of two months or 2 half months. You had the first half that continued irrational exuberance, people pushing stocks up based on vapor and interpretation of non-GAAP numbers. My favorite saying now is mind the gap, GAAP. We have the highest level of non-GAAP accounting reporting we've ever had in history. And that's just wrong, right? It's called generally accepted accounting principles for a reason. We're supposed to use them. So I think the first half of the month was really kind of weird because it shouldn't have gone that way when all the pre-announcements were negative and it looked like earnings were going to go down again for the fourth quarter in a row, which looks like it's going to happen. But then you had the second half of the month, which has just been basically straight down as people freak out about the coronavirus and start to realize that maybe things aren't as great as they otherwise appear. Now, even within that, you had single companies like Amazon or others report what appeared to be, and I say appeared because, again, Amazon's numbers weren't really that great. I mean, 7% year-over-year growth. I mean, really? You want to pay 96 times for a 7% grower? That doesn't make any sense. But, there's this, I don't know, there's a tension that exists in the U.S. markets between the liquidity that's being provided by the Fed, and it's got to go somewhere. So there's this whole TINA thing. There is no alternative narrative that, we just got to keep buying these big five stocks. And we just reached the point where we surpassed the concentration peak that we saw in 2000. And look, in 2000, I'm old enough to remember. A lot of listeners aren't, but they didn't live through 2000. But in 2000, everybody said you could not go wrong owning Cisco, Intel, Microsoft, and Qualcomm. Well, if you bought those four stocks in March of 2000 and you held them to today, you're still down. The only one that's up is Microsoft. And so I think we're at that same point with the Fab Four, the $1 trillion club, Google, Amazon, Apple, and Microsoft. I just think they're way, way ahead of themselves. And when you trade at 8 times book value or 96 times earnings, we know historically that has ended badly. And that irrational exuberance does eventually come to an end.
No doubt those stocks are the focus of the market. This is Futures Radio Show. I trade S&P futures and 10-year futures, but I'm always keeping up those stocks because I think it's so important to see what they're doing. And without question, I am constantly watching them on a technical basis to see if they're showing me a sign one way or the other. And technically they just continue to push through to the upside, and that's really a lot more what I focus on, and you focus more on the fundamentals. What do you think happens to eventually change this? Everybody piling into these stocks.
Yeah, look, it's interesting. Bubbles are very, very interesting phenomena. Now, the cool thing about bubbles is 100% of them in history, not 99, not 98, not 75, but 100% of bubbles burst. And this bubble will burst too. The problem is you never know where the pin is going to come from. You never know when the catalyst is going to emerge. And bubbles do feed on themselves, right? And you've seen it. You look at the parabolic move in Microsoft and Amazon and Netflix and Google and NVIDIA and AMD up until Wednesday this week. I mean, AMD, I put this in my 10 surprises presentation on Tuesday. AMD is trading at 3 times the valuation of 2000 with half of the growth. I mean, that stock could fall 80% and still be overvalued. And that's not even the craziest. I mean, the craziest are things like Beyond Meat or Zoom. These companies that are trading at 50 and 60 times sales. Forget 50 and 60 times earnings. These are 50 and 60 times sales. That's never happened before. And so what you've got is this self-perpetuating mechanism. Everybody looks at each other and says, well, he's doing it, she's doing it. They must be smart. And so it goes until it doesn't. And I can't tell you when or what that change is because it's a behavioral phenomenon in that, when everybody is getting rich by not working, by basically just punting in stocks, then everybody thinks it's easy. And so everybody starts to do it. And the more they do it, the more it happens. And it's self-perpetuating. And you got all this money flowing into passive. And the passive strategies aren't allowed to think, right? They have to buy irregardless of valuation. They can't stop. And that is one thing that does trouble me a little bit, in that, back in the good old days, there were human beings involved in trading, and human beings actually would occasionally step back and say, does this make sense? No, maybe I'll sell a little bit. The machines can't do that. The machines are programmed to buy if everyone's buying and sell if everyone's selling. Now, what happens, though, is when it does turn, it's going to turn hard and fast. And that's why I have that hashtag on Twitter, hashtag risk happens fast. I think today was a good example of that. When people do start to get nervous and that first person starts to sell, well, that selling begets more selling. And I said, I don't know the catalyst, I don't know the trigger, but I know it's going to come, and I know that we will go back to normal valuations again, as we always have in history. And it's going to be. And there's a quote from Shakespeare that I like that relates to this, and it says, it's from the Merry Wives of Windsor, that in matters of great importance, it's better to be 3 hours early than a minute late. And I think that really applies to your wealth.
Yeah, I'm not someone who compares times to other times. I've been trading for over 20 years, and hard to believe I'm even saying that, but
I was going to say, you started with 7. That's pretty good.
Exactly. And I started trading at the end of '98 and saw a lot, obviously, from then till now. And I'm, like I said, because I trade futures and because I'm more of a day trader, I really don't compare times. But when I see these moves in these stocks, I don't necessarily look at them and kind of predict when they're going to end, because I know at some point they will. They all do, right? But there's one thing that I look at. It's very similar to what you had just said, is what are people doing different in their lives due to the wealth that has been generated from it? And there is something similar about the way I'm seeing some people spending money and doing things like that, which is something that I'm just actually starting to see a little bit now in my life. So, and not necessarily that I'm comparing the markets to times that I've seen in the past, but there's just a certain feel out there.
Yeah, well, look, and it's a really important point that you make here, which is, look, I'm a fundamental guy. I think of myself as an investor, as opposed to a trader. And I don't say that with any better or worse, positive or negative. I think traders are fantastic. I think investors are fantastic. I even have room in my life for a few speculators. And the difference is, a speculator is really, it's a form of gambling, right? You're betting on movement. You're betting based on little information other than the movement of price. Whereas a trader makes movements, makes changes in their portfolio based on, signals and processes and rhythms and pattern recognition and experience. And so trading is actually a wonderful skill, and they're fantastic traders, and those that follow your podcast are getting better at trading and all of that. So trading is not, again, better or worse than investing, but investing is different in the sense that investing is more long term and tends to be more fundamentally oriented. But I think you have to have a marriage of both. And I have a Twitter friend, Larry Tenerelli, who's a great trader, and he's like, I don't have time for fundamentals. I follow price. I don't try to outsmart the market. I just follow my signals. And he has a great line about this. He says that, you'll know when the trend has changed, and it doesn't happen immediately. It happens, quickly, but it doesn't happen instantaneously. And again, Soros has a great quote about this. It says, most people think that you need to be contrarian all the time, and that's just not true. You only need to be contrarian at the inflection points, because during the trend is your friend, and if you fight it, you'll just drive yourself crazy and you'll lose a lot of money. And the key is to have the knowledge of when those inflection points are happening. And the cool thing is, I'm a biology and chemistry guy. I mean, was pre-med undergrad, and I think science training is the best training there is for investing. And one of the things about that is that inflection points do have a tell, and it has to do with volatility. And it's very similar to the phase shift in water, or when water goes from liquid to solid or liquid to gas. Right before it changes phase, the electrons start to vibrate very violently. And the same thing happens in markets. The volatility starts to spike much higher near those inflection points. And it gives you a warning that, hey, maybe I should start paying attention. And when things aren't very volatile and things are trending, don't fight it. Just be happy and trade it and take advantage of it. But I feel like that volatility vibration is really amplified in the last 2 weeks. And I think we are at an important turning point.
Hey, everybody, I want to take a quick pause and talk about RJO Futures. They are a long-standing brokerage firm with personal broker relationships to learn, discuss, and trade the futures markets. To learn more about RJO Futures, please visit rjofutures.com. I want to move on and talk about the Fed. You've mentioned it a couple of times already today. What do you expect from the Fed this year?
I think the Fed's going to have to cut a couple times. I mean, it's already in the market. Fed funds are already below. The markets are telling us that Fed funds need to be below where the actual Fed funds rate is. And I think the growth scare from the coronavirus thing is going to weigh heavily on trade and growth, and that's going to force a need for more liquidity. And the Fed's between a rock and a hard place. It's they don't have many arrows in their quiver left. We're at stagnation kind of levels of growth or lack thereof, and the market is dependent on stimulus. And in many ways, it's like that addiction. They probably should have taken the morphine drip off in 2013-14 and let us have a normal correction through 15-16, and they didn't want to do that. So now we got a patient that's really strung out and really dependent, and they keep needing greater and greater hits of the medicine. And I think they're going to have to capitulate and cut. So I think we'll be back towards ZERP, by the end of the year, and that will be an interesting dynamic to see which force is more powerful this year: the Fed liquidity being a positive tailwind, or the economic fundamental headwinds that I think are going to grow over time.
So just to follow up on that, if that's what you think the Fed is going to do, does that still support your defensive mentality for this year?
Again, it says that it's going to be more challenging to have one position and stick with it, because we don't know. Like right now, it's clear that defense is winning over offense for this month, right? But we don't know who's going to respond more, right? Is the Fed and other central banks going to respond more and cut and provide lots and lots of liquidity? Or is global growth going to be so horrific that the headwinds are just too strong? And, there's a great line about optimists, pessimists, and realists, right? Optimists or pessimists complain about the wind. Optimists think the wind's going to change, and the realists adjust the sails. So I think this is going to be a year of rapidly adjusting your sails and ducking a lot so you don't get smacked in the head with the boom crossing over the surface of the boat.
I want to talk about Bitcoin.
Yeah.
Right. You and I can't have an interview and not talk about Bitcoin. You said that you were doubling down.
Yep.
Right?
Doubling up. Never
Doubling,
double down. Always double up.
Double up. Okay. And also, you talked about how you've made a lot of money selling early, or it was a quote, and you said you're happy to sell early and make money. Where would you start selling Bitcoin?
It's a great question. So, see, we view Bitcoin very differently than others, in the sense that to us, Bitcoin is not a trading vehicle. Bitcoin is not it's not really a currency today. It's really a store of value. And what it is for me, it's a venture capital investment, right? I believe it's basically a private company, an early stage company that just happens to have this liquid token that people can trade in. And I'm going to hold it for years, maybe decades, because I believe that Bitcoin will become the base layer protocol for the Internet of Value, or what I call the trust net. And we're still 4 years away from that evolution. And this goes back to 54 with the mainframe, and 68 with the microchip, and 82 with the personal computer, and 96 with the internet, and 2010 with the mobile net, and 2024 with the trust net. And the same thing that email did to information, and the mobile phone did to e-commerce, blockchain technology and Bitcoin in particular are going to do to the transfer of value, or money over internet protocol, MOIP. And the difference between, I use the example of Amazon. So 20 years ago, you could have bought Amazon, and if you held it for the last 20 years, you've made a ton of money. The problem is no one did. Why? Because it was hugely volatile in that period. In fact, every year, including this year, it's at a double-digit drawdown. Average drawdown is 31%. Twice it went down more than 90. The only people that have owned it since the IPO to this day are, I say, Jeff and his mom and dad, and I guess maybe his ex-wife. But that's it. And everyone else has come in and out and traded it, and they most of them didn't make any money. Some have made still a lot of money, but there are a lot of Amazombies that have made a lot of money up in Seattle. But the key is that there was never a good time to sell Amazon, because it was a world-changing technology. And I think the same thing is true about Bitcoin. It's a world-changing technology, and the only way you can own it is to own the protocol itself. You can't own shares of stock in Bitcoin. There is no company. There's no CEO. There is no board, right? You have to own the protocol. So we don't trade it. We just own it, and I'm going to keep buying it every chance I get, and plan on holding it for a long time.
So what's interesting to me is, with you, Bitcoin is the one investment that you're just going to have and own, and there's no price. I mean, you can correct me if I'm wrong, to where if it went down to, you'd sell it. You'd get out of it.
Yep.
That's a true, really strong conviction to have.
Yeah, it's true. But it's the same way I feel about fundamental ownership of certain assets, right? I mean, Amazon's a great example, or Microsoft could be a great example. But there are things where you do just want to own them. On the other hand, the index can be overvalued or undervalued, and individual companies can be overvalued. And one caveat is, there are times when companies, stocks, do get highly, highly overvalued, and it does make sense maybe to step aside and let them run. That was Microsoft in 2000, or Cisco in 2000, and I actually might make the case that it's Amazon today for a while. Bitcoin will have those periods. I mean, in 2017, I told all of our clients and myself to step to the sidelines when it was 20,000, and to wait if you're going to accumulate it until later in the year in 2018, and that turned out to be prescient. And that's because there's a fundamental value of of the protocol itself, and you can determine that by the number of wallets and the number of users and the growth. But then you have the highs and the lows, and that's greed and fear. And so if you think about any asset, it's got a fundamental fair value. And when you're way above fair value, like I might argue Netflix stock is way above fair value. Maybe it's not, maybe it is, but I would argue that it is. I'd probably want to own less of it when it's way above fair value and own more of it when it gets below fair value. So same thing would be true of something like Bitcoin. So is there a price at which, when it goes down, I would say, yeah, it's going away and I got to get out? See, I think the likelihood of it going away is pretty close to zero. In fact, I might even argue it is zero. I think it's a protocol like TCP/IP. It doesn't go away. It's going to fluctuate in value because people don't really understand it. But that's why we don't think of it as a trading instrument. There are people who trade it, and I think it's actually a wonderful instrument for traders because it does trend quite nicely. So if you are a trend following trader, you can actually trade in Bitcoin pretty well. But I look at it just different. I look at it as a core holding of, something I want to build on as a piece of my portfolio. Now, I'm not putting 50 or 60% of my portfolio in it either. I'm happy at kind of 2, 3, 4, 5%, and then another 2, 3, 4, 5% in venture capital companies surrounding Bitcoin. But if I were younger, I might raise that percentage by, a couple turns. I might go as high as 10, 15%.
Is it just Bitcoin you're investing in, or are you investing in other cryptocurrencies? We
have most of our money is invested in Bitcoin. Then we also have something called the Digital Asset Index Fund that we did with a joint venture with Bitwise, and that owns 10 cryptocurrencies. So it owns the top 10 by market cap, excluding the 2 illiquid. So we don't own XRP and we don't own Stellar or Lumens. But we own a little bit, but Bitcoin's 80% of that, but we own Ethereum and we own Dash and Monero and, even the Bitcoin Cash and Bitcoin Satoshi's Vision, which a lot of people hate and they don't. But look, maybe they catch on. Maybe they don't. Maybe they become a payment system, whereas Bitcoin becomes more digital gold. So I don't want to try to speculate on that because I'm not really the techie. I look at it and say I want to own 85% of the market of crypto. I can do that with the top 10. Most of that's going to end up in Bitcoin. So the Digital Asset Index Fund, if you index something, you're passive. 2, you're trying to own the vast majority of the market cap. And that's the way we think about it.
You and I talked a few years ago about Bitcoin. Do you think it's come further along, not as far? What do you think about Bitcoin from when you started investing in it?
Everything's better. Fundamentals are better. The ecosystem's better. The infrastructure's better. People understand it more. They get that it's, technology and that it's really a fundamental core operating system for this next, Web 3.0. So everything's better over the last 2 years. And, obviously the price is better. That's the cool thing is, people are so infatuated with the high price. But that's not important. That's noise. What you should be focused on is every year. So Bitcoin's been around 11 years. Every year but one, 2015, it's made a higher low. And that's an indication of growth of the network, increase in adoption, and growing use cases. And fundamentally, that gets me excited. And everything about it is better. And I think the future is bright. And I think this year is probably a pretty big breakout year between now and mid-2021. I think you could see a pretty dramatic move in Bitcoin price.
Awesome conversation, Mark, but we are not done yet. I have some rapid fire questions next if you're ready for those.
I'm ready. Do it.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. You can try it now for free at tryttnow.com. Mark, you and I have done a rapid fire segment in the past, but it's been a little while since you've been on the show, and I changed some questions. So first question for you today is, what trader has influenced your life the most and why?
Trader is interesting. So investor would have to be Julian Robertson, friend, mentor. But trader, I would say it would have to be Paul Tudor Jones. I mean, I just admire everything about him as a trader. And he thinks of himself as a trader, not as an investor, not as a stock picker. But his macro approach to the world, his use of everything from, lunar cycles and other behavioral elements that a lot of people eschew and think is voodoo and witchcraft. Paul is to me the ultimate trader's trader, and studying his life of work, body of work over the course of his life would make any trader better.
What was one of the hardest things for you to overcome in investing?
That's again, great question. Look, just being able to deal with being wrong. As we were talking about earlier, a lot of people are just so hung up on they have to be right or they're afraid of being wrong. And I think the great thing about investing is you learn more from your failures than your successes. In fact, on my desk, I have a little saying from Seneca the Younger that says, failure changes for the better, success for the worse. And, you always get lulled into a false sense of security when things go your way. In fact, the worst thing that could ever happen is you do your first trade and you make a bunch of money. And it's just going to set you up for ruin later on because you get overconfident. So having to deal with that human part of being wrong and understanding that you're going to be wrong a lot, and that to be a great trader, you have to have instant erasure. And it goes back to I had the privilege to spend an hour with Coach K once, and it was funny. About halfway through the thing, he says, our business are exactly the same. I'm like, oh, please tell me, Coach, how I have anything in common with one of the world's greatest coaches of all time. He says, well, look, let's think about it. Most of your business is fund to funds, and I'm a coach, and we identify talent. So we scour the world to identify talent, and then we build a team, and then we drop a game plan, and we put the team on the floor, and then we sit down. I said, oh, wow, Coach, our businesses are exactly alike. You're right. And I said, yeah, I never take a shot. You never make a trade. And, we were exactly, I was like, that's pretty cool. So I got that going for me. But what he said that always stuck with me is what differentiates an average player from a great player is an average player always focuses on the last play. And how many times you've seen a player miss a shot, go down and commit a stupid foul. He says a great player always focuses on the next play. So a great player takes a shot, misses, doesn't even remember that they missed. They go down and play good defense, make a steal, make a layup. So Michael Jordan talked about that all the time. He says, look, I've missed thousands of shots, but I want the ball to take the next shot because I think I'm going to make it. And so confidence is wonderful, but that ability to have instant erasure and always focus on the next play, if you can do that in trading, you'll be much, much better over your life.
How has your investing process evolved over the years?
Well, the best part of evolution is time, right? So you learn from your mistakes and you evolve. And I would say that the biggest change has been, I was brought up in the fundamental world. So it was always about the fundamentals. And I would say I have a much greater appreciation for the technicals now, for the things that separate great traders. And I've been better about overlaying trading signals when I go to buy something fundamentally. And I don't fight a trend as much as I used to, and I don't have to prove that I'm right and the market's wrong. And I think it's that mix of the fundamental skills of a a Julian Robertson and the trading skills of a Paul Tudor Jones. If you could be that person, you'd be unstoppable. So that's what I aspire to. If you aspire to greatness, maybe achieve something a little bit less than that, which is okay.
What is one attribute that you believe every investor should have?
Competitiveness. That's the number one thing. You have to be competitive. You have to want to win, and more importantly, you have to hate to lose. And it's not a zero-sum thing. Like, you don't need to beat other people, but you just have to win. And so that competitive spirit, I don't care what it is, right? Whether it's golf, tennis, tiddlywinks, or trading, being a super competitor is important. And a close second to that is honesty and integrity. If you cheat in anything, you'll lose over time. So you gotta have absolute integrity and honesty to be great at anything.
If you could go back in time and give the younger you a piece of advice, what would you say?
I've actually tweeted about this, and it's such it's a great question. So for me, it's really, really, really focus on balance. Working too hard is not smart. So working on balance is really important. I would say read more. Read old books, because that's where all the good ideas are. I would say, I came to taking care of my health too late. Not too late. I haven't had any health scares, but I didn't take care of my health early in my life, and I've gotten much better at it now. But I would definitely tell my younger self to spend time, and not just physical health, mental health, right? Take time out, learn how to meditate. And then the last thing, and this may be the most important thing that I've come to realize, is really, really focus on relationships, professional relationships in your network, and your friends. Be a good friend, and because we all need those relationships, and we need those people in our life to get us through the tough times. And it also makes us better at everything we do if you've got someone to bounce ideas off of. And so those would be things that I would focus on as a letter to my younger self, so to speak.
If you had an elevator pitch me your edge in investing, what would you say?
Well, my thing is hashtag edge. I'm actually wearing my edge t-shirt today, of all things. So it's a perfect timing for the question. But I think there are a couple of edges you can have, right? You can have an analytical edge, right? You can be just smarter or have better computing power. I don't think that's my edge. You could have an access edge, right? You could have a better network and have better access to information. I have a good network, and going to conferences like yesterday is a great example, but that's not really my edge. My edge, and I think it's become more and more important as the information technology boom has come upon us, is I think my edge is synthesis, right? I say all the time that we're drowning in information and starved for knowledge. And information is ubiquitous. Everybody's got the same information, so that access edge is kind of slipped away. Now you have to be able to discern what's important information and what's not important information, and you have to be able to synthesize disparate bits of information and come up with conclusions and form judgment. So I think that's probably my edge, is that ability to synthesize lots of data, lots of disparate information, to integrate different points of view. And I guess related to that would be, I think I'm willing to step out of the echo chamber and actively seek alternative views that challenge my beliefs. And I think it makes me a better investor.
Last question for today. Now, this comes out on Monday, so it's going to come out after the Super Bowl. But who do you got, and what score do you have?
Geez. Look, I'm a San Francisco hater because they beat my beloved Seahawks. So I hope they go down. But here's the struggle I have, right? As I said, defense wins championships, and I think San Francisco's D is probably better than Kansas City's, but man, Mahomes, I haven't seen anything like this guy in a long time. So I think it's going to be a really tough game. I think everyone thinks it's going to be a high-scoring game. I think it probably ends up being a defensive battle. And unfortunately, I think San Francisco might actually eke it out. I'm going to go kind of 24-21 San Francisco, which is probably a really bad prediction.
My prediction is San Francisco 27, Chiefs 24.
Oh, wow.
And I do believe the Niners are going to win. I know. I heard your score, and I'm like, yeah, you know what? I feel the same way. I think Mahomes is special. I love Andy Reid. I like the whole team. But the San Francisco team, to me, when I look at them, it's like you don't want to get in a fight with these guys. That's kind of what I'm basing it on, is I just feel like they're going to come in, and I just feel like they're going to manhandle them a little bit. I could be wrong. We both could be, but that's the way I see it as well. Mark, where can people find you on Twitter, and give us a website to check out?
Yep. So I'm at Mark Yusko, MarkYusko, on Twitter. And as my wife says, I tweet way too much. So you can always mute me if you get tired of me. And our website is morgancreekcap.com. And there's lots of resources on there, letters and media stuff. And then the last place to look for us is if you go to YouTube and you just type my name into YouTube, our YouTube channel will pop up. It's called Around the World with Yusko. And you can subscribe to that. And we do videos once a month on all kinds of different topics. I just did my 10 surprises for 2020. And it's a pretty good whirlwind tour. I did like 314 slides in an hour. So good stuff.
Mark, you're a great follow on Twitter. You're a great friend. I can't thank you enough for taking the time for chatting with me today on Futures Radio Show.
No, thanks for having me, Anthony. I look forward to doing it again. And I look forward to catching up on Twitter about the outcome on Monday.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.